at IAMAI. It gives me great pleasure to see so many delegates who have joined us in huge numbers from across 50 countries to view the largest virtual global fintech fest. This conference is organized by Fintech Convergence Council of IMEI and NPCI. This conference is presented by Department of Economic Affairs, Ministry of Finance, and Reserve Bank of India, and powered by Amazon Pay and brought to you by WhatsApp and Google Pay. Here we have our esteemed panelists who would be discussing their vision for the digital payments in 2025. I would like to start by introducing our moderator, Mr. Naveen Surya, Chairman, Fintech Convergence Council. Welcome, sir. Our esteemed panelist, Mr. P. Vasudevan, Chief General Manager, Department of Payment and Settlement Systems, Reserve Bank of India. Welcome, sir. Mr. Dilip Pathe, Managing Director and CEO, National Payments Corporation of India. Mr. T.R. Ramachandran, Group Country Manager, India and South Asia Visa. Dear delegates, it's a rare opportunity to have such great experts with us. I would request all of you all to keep sending us your questions and sending it to the panelists. Please make sure that you give the names exactly which panelist you probably want them to answer. Having said that, I would request Mr. Surya to take this up.
So, good morning, good afternoon, good evening to all of you. As I was just saying that you're not going to get rid of me easily. But welcome to all my esteemed panelists. I think I can't ask for more. Two networks and the regulators with me. And we could talk anything in the digital payment. So the theme of today's panel is digital payment in 2025. So first request Sri Vasudevan to start with his address on digital payment in 2025 as to the vision, how the regulator sees it. Sir, over to you.
Thank you, dear Naveen ji, and a warm hello to my fellow panelists, Mr. Dilip of NPCI and Mr. Ramachandran Abhisa. It does seem a little tight to be sandwiched between two major card networks and we a poor regulator sitting here. But I feel very happy to be part of the largest virtual fintech conference and of course part of the session. I am grateful to the organizers for facilitating this and inviting me. And namaskar to the unseen viewers and listeners as well. See, a typical present scenario where most of us are under lockdown, to whatever extent, as Mr. Naveen was mentioning, in different time zones, in different jurisdictions. And we are generally unsure of what is next, how things will work out, and when will we ease back to normalcy. It does seem a little bit surreal to think of expense and look at digital payments in the year 2025 and the next 5 years how things are going to pan out. But I'm sure none will hold us to ransom predicting something linear because that is what we are generally used to. Just to give a perspective, we handled on a daily basis 100 million digital transactions in the present day. And this value is about 5 lakh crores of rupees, or simply put 5 trillion rupees. And when I say digital, of course, it doesn't include paper. Paper also clears quite a huge volume of instruments across the country on a T+1 basis. This figure of 100 million, if you look back a couple of months back prior to the start of the COVID or even the lockdown in India, was around 120 million a day. And last year around this time, if you look at the volume of transactions on a daily basis, it was around 85 million. So typically we are seeing a huge increase year on year. And just let me go back 5 years period to 2016 June, it was only 22 million. So in the last 5 years, we have seen a significant growth in digital transactions at a compounded annual growth rate of 58% in volume terms, and of course 15% in value. We are seeing these digital payments being used for small value payments by increasing number of users. So the future is tremendous and sizable if you look at just the linear trend as well. And when I look at the past 5-year period, significant events have happened as well. For example, demonetization, how can we forget that event? And COVID-19, we are still seeing the impact of COVID. And there have been quite a number of systems that have been launched, like the popular Unified Payments Interface, with its 2.0 versions and some more initiatives being planned by Dilip and team. The Bharat Bill Payment System, which has taken the bill payments to a next level. Multiple biller categories have been facilitated. As I see, the bill categories and payments volume are only around, say, 20%, and the scope is enormous to add more volumes and categories as well. And of course, we have the transit and mobility payments like NETC or National Electronic Toll Collection, the FASTag based ones, the Common Mobility Card, and of course, I can't forget NEFT 24/7 being operationalized by Reserve Bank as well. One more factor also I just want to highlight is how ECS had to be discontinued. The popular electronic clearing service had to be discontinued after 25 glorious years of service to the nation. And in its place, we have the National Automated Clearing House that has come up and which has handled significant volumes during the COVID for the government DBT transfers. So each of these systems have their place. And if you have seen the journey for the last 5 years, we have moved significantly to a significant level altogether. And if I have to put a perspective to the next 5 years, we fortunately have the advantage of a payment system vision document as well. The payment system vision documents are being released by RBI right from 1998, covering a 3-year period. And the latest 2021 vision document was released in April 2019, covers the period 2 years hence. To be fair enough, we have just completed 5 quarters of the vision document. We still have 7 quarters to go. And of the 5 quarters, we have completed 1.5 to 2 quarters have been lost because of the COVID and the slow takeoff of certain systems as well. So we have at least 2 years of time left for the future initiatives that have been planned under the vision document. And if I just take up some of the initiatives that we have just announced and are in the pipeline, for example, the self-regulatory organization we are expecting to come up with, we have said that we will come out with a framework very soon. We have also announced a draft framework for the new umbrella entity, and which is also going to change the facet of payments in the next coming set of years. Of course, we have the Payment Infrastructure Development Fund that has been announced. Reserve Bank has just made a contribution, sizable contribution to the fund. Council comprising of our top management plus the industry players. The PIDF is expected to revolutionize the way the acceptance infrastructure is going to happen in the country, be it physical POS, be it digital POS, and we are looking at tier 3 to 6 regions as well, which are typically less impacted or benefited by this acceptance infrastructure. And of course, the focus will be on the northeastern states as well. So the entire dynamics of the acceptance infrastructure will change. And I'm sure that the present numbers that we have, say 5 million physical POS or 20 million digital POS, will be upscaled many a time. And this is going to really change the way people are going to look at digital payments. And we can't even forget the instructions RBI has issued about payment aggregators and payment gateways, because next year these guidelines are going to kick in, wherein after a decade of indirect regulation, we are going to move into direct regulation. There will be a huge number of entities which are large enough who are going to play. Probably they are going to come in with their innovations, and the entire eco space is going to have new players, new maybe umbrella organizations, new large tech players, and new segments that are going to be opened up. I'm very bullish about some of these segments that are available, especially the cash on delivery payments. Easily we can convert them to digital mode, and of course the increasing acceptance of mobility and toll payments. Toll payments will definitely not just be used for parking, but also for fuel and other purposes, as was announced by Reserve Bank in the recent press release on furthering digital payments. And the common mobility card is also going to come out with certain combo options, which is going to change the entire facet of how we are going to look at the future in terms of card usage and usage of these digital payments for small value but large volumes. And one thing also I want to mention here is about the innovation contest which Reserve Bank had recently conducted in collaboration with our subsidiary, that is the IDRBT, and also the winners in those contests. Of course, NPCI also a grand challenge in which we have a winner, and the regulatory sandbox initiative of the Reserve Bank, wherein digital payments was the first cohort. And we have 5 shortlisted applicants in the regulatory sandbox who were to start the pilot in February, but because of COVID, again, the pilots have been shifted to August. And I'm sure these pilots will facilitate solutions feature phone users to make digital payments, to enable digital payments in locations where connectivity is low or not there. And we can actually look at interoperability between smartphone users, feature phone users, and no phone users. And if just imagine if these instruments and users are brought into the formal digital payment space, it may take 3 to 4 years. We may be in 2024 by that time, but the volumes are going to significantly change, and the number of users are going to be many, many more and new ones as well. Of course, I heard the opening session being mentioning about certain technology-related improvements being brought in by various players. I just want to mention about tokenization, about e-mandates, which Reserve Bank has enabled. These are actually going to change, including, of course, I can't forget the recent circular on switch on and switch off facility for cards by users themselves. These are going to bring in elements of safety and security in digital payments, giving increasing control to the users of the transactions for the transactions they perform. Because ultimately, when we have to move ahead, we have to scale up our volumes. We have to also provide safety and security for the users, because that is the mool mantra behind which RBI has brought out various initiatives. And of course, I can't just sit back and think that our dear panelists, Dilip and Ram, are not going to push us, giving new ideas and technologies for system upgrades, which will also keep us busy. At a linear level, when I talk about the last 5 years or the next 5 years, we are going to look at a linear level of a CAGR of 58%, we can expect the daily digital volumes to reach at least 1.5 billion. That is a rise of 15 times from where we are. And the value will be at least 3 times fold from now, 15 trillion rupees. It means that small value transactions are going to be significantly high. And if the above initiatives, which I have just highlighted, are also taken up in full steam, there will be so much better and the reality will be so much higher. The future is absolutely very exciting. Imagine at least one digital payment per day per Indian for every payment need with multiple payment choices. That is what we are seeing in the next couple of years. In 2025, we'll see the reality of this. And I'm also very happy to announce here that there are many other jurisdictions who are trying to emulate some of our approaches of having a legislation, having an umbrella organization, the way we have grown our retail payments. There's a huge interest in across other jurisdictions for our approaches, as also for some of our products and instruments. So we will have our Indians walking around in different jurisdictions, comfortably seeing similar products being available there. So that's also one exciting prospect that we can look forward to. Of course, one more activity I just want to mention: the cards, in whichever form they exist, either in plastic or on mobile devices or even on wearables, or even in combo, the NCMC card, etc., will be seen maximum usage only for typically online payments. We only hope that cash withdrawals will be a thing of the past, though we have provided certain facilities like cash withdrawal at POS, etc., for a confidence purpose, building purpose. But we hope to see the cards being used increasingly for online transactions and payment purposes. I just want to say, normally we use the word touch wood or touch plastic, but I don't want us to touch plastic or to touch wood, because I want us to use these card payments for other purposes. And I'm sure in place of passwords and pins, we are going to see face and iris recognition coming forward as well. We have so much of payment systems happening and so much of volumes happening, we can't forget data. Now, data is going to be increasingly used by the Reserve Bank for policy purposes, as also for the industry for their future initiatives. And we look at the data, we need to have some good systems which can actually collect data. I am very eagerly looking at the centralized payment fraud registry, which has just commenced activity. We are getting inputs from large players, both banks and non-banks. We will be making an analysis of the trends and presenting to the industry. We don't have to worry about the number of frauds or even the value thereof, because in terms of percentage to sales or to the turnover, these frauds are abysmally low in number. But that doesn't mean that we can relax and enjoy the comfort. We also have to be continuously on guard. I'm also looking at the scope for geotagging of payment transactions, both using latitude and longitude, which will also help us in targeting specific locations in the country which need to have digital volumes, as also for pushing digital awareness and coming out with some focused initiatives. And when we use extensive technology and data, we also will look forward to the online dispute redressal systems, which will change the way users interact and interface with the systems 24/7. You are all aware of the benchmarking exercise that Reserve Bank had done recently last year. We have seen some areas where we are moderate or we can actually improve. The entire set of initiatives which we are undertaking now is to address these areas where we have scope to improve, and so that it will make us the best country insofar as the retail payment systems are concerned in all spheres across the globe. In 2025, I can envisage us to have a bouquet of payment options for smartphone users, for feature phone users, and for no phone users as well, irrespective of connectivity, whether it is there or not. irrespective of whether we have voice or data connectivity. And of course, all the systems will be resilient, safe, secure, and interoperable. The present COVID scenario has also tested all business continuity plans for extended times and have emerged successful, notwithstanding hurdles in access to resources, as Dilip was mentioning earlier, be it physical or the machines. Let us make the digital a divine experience to all. That has been my thought process, and I will want to say one more thing before I conclude is that even as we expect so many improvements to come in the next couple of years and 2025 to see so many changes, one thing that will remain constant, according to me, is the way the fraudsters try to scam, including using existing methods of phishing and smishing. We need to continue to up the ante on digital awareness and literacy, which will have to be a sustained effort by all stakeholders. Also, the sophisticated ways in which the cyber criminals and attackers are going to steal or attempt to steal data and identity will need sustained efforts to mitigate and overcome from all stakeholders. I look for a continued cooperation, collaboration. As I complete my initial words, I just want to remember Robert Frost and his lines. We have promises to keep and miles to go before we sleep. Only fact is the 24/7 payment systems will make us sleep less and leave us speechless. Thank you and all the very best to all the speakers, panelists, and I will be happy to take forth any questions that come forward. Thank you again.
Thank you very much. So I think you have left us very few keywords to talk about. You already covered a lot of interesting innovations and the new institutions and the models that are likely to come. So I'm jumping directly into the question answer, Ram, with you and Dilip. So my first question gets into that you already heard about a lot of innovation, which is even RBI, as Vasudevanji said, that they are considering and they believe that post-COVID world, a lot of them will come. He also said that you and Dilip keep throwing challenge on him. So my first question will be, is there some new innovations that you want to give him a heads up that you're still planning and thinking? Besides, also your comment on some interesting things like where do you see contactless moving forward, faceless moving forward? Where do you see a soft pause, I mean, without physical devices? Where do you see it going? So we'll start with Ram and try and give us some heads up in 2025. What are you thinking? Where are we going? Are you on mute, Ram? Can't hear you.
Thank you, Naveen and Mr. Vasudevan, for a fantastic opening address. It's really great to see the passion of the regulator, and we have to sort of strive to keep up and keep pace, which Dilip and I will endeavor to do. So in terms of, I think the RBI's vision document for payments is an extremely good foundational document, which gives us the guardrails for what we should be doing. At the same time, I think that in India, we have to innovate for India as well as get the best from global best practices also into the country, both in innovation and sort of security. We are seeing payment experiences becoming more diversified. We are seeing the digitization of payments is accelerating. And as Mr. Vasudevan said, this is also in the non-discretionary segment of whether it's bills or transit or whatever. Payment infrastructure is modernizing. And we are seeing across the globe that regulators are driving a host of payment innovation. And the NUE is a classic example of that regulatory-led innovation in sort of payments. And I would say going forward, if I can just divide, and I won't take too much time, but just if we divide into e-commerce and face-to-face, in e-commerce, I think tokenization is going to be the bedrock, right? Because as more and more merchants put card credentials or payment credentials on file, customers are going to ask for security. And devaluing those credentials and making them sort of safe, I think the RBI has also made a start with mobile tokenization, but card on file tokenization is going to be the next big thing, because that's what we are sort of at least having discussions with Mr. Vasudevan and his team, because as he rightly said, e-commerce is going to be a key linchpin of sort of this payment of growth. So we look forward to sort of tokenization. On contactless, many countries in the world have increased contactless limits. And the interesting innovation is tap to phone, which is a phone becoming a device where contactless can be sort of actually used. The third thing is risk-based authentication, right? Where authentication is no longer phone-based OTP. Can it be iris or some of the things that Mr. Vasudevan mentioned, but it can also be based on a variety of sort of risk-based authentication mechanisms. So I would say those are sort of large thematics from our point and it'd be great to have a dialogue. Of course, the PIDF is really, really exciting, and we really look forward to being on the advisory council and working closely with the regulator in terms of the enormous scope, because acceptance still has to be the centerpiece of the thesis for digital payments in the country. Let me stop there and hand over to Dilip.
Dilip?
Thanks, Ram and sir. Actually, I was taking notes where Ram and Mr. Vasudevan was talking that what are the things we have to do. So good, great speech again, sir. Thank you for that. And the regulator is always leading the innovation, and we have to come to your expectations, and we'll continue to try our best to do that. Look, it's very, very difficult to predict what will happen in 2025. But let me take a shot. As Mr. Vasudevan said, definitely we will be a billion a day at in Indian payment ecosystem. I don't have any doubt in my mind. As far as the payments to GDP ratio or a personal consumption expenditure ratio, I think we'll be matching to the developed economies. Take any of the European countries. We'll be there. Between 30 to 40% of digital payments part of the PCE. I also think that we would have moved to the ecosystem which is able to do everything in a remote manner. So which is use the face authentication, use the AI to grant loans, use of completely a remote and presence-less manner. We'll be able to do that. I'm sure UIDI face authentication will play a great role in getting there. And the last thing which I believe is I just hope with Geo being there now, we will have 90% plus smartphones in the country, which will kind of change the way the payments or financial services are accessed by the consumer. So I believe these are the 3-4 things I envisage can happen in 2025.
Thank you, Dilip. I think this is there's a lot of food for thought for the whole industry, that what is things to come. I think Vasudevan sir want to say something. Sir, please.
No, I just want to add to what Mr. Ram and Mr. Dilip have said. It makes the regulator feel a little good about the words they have used, but I would like the payment systems to be a public good infrastructure. Though it makes us feel good, but let it be seen as a public good by all the users. So that is what I try to say. Because one thing is there that the measures which Mr. Ram was mentioning about tokenization picking up and card on file coming up, we would also like to see traction before some other initiatives could be experimented or tried as well. So as and when activities pick up and we have multi-use cases coming up, of course, we will also be positively looking at all these developments, and we are glad to contribute to the ecosystem. So you look at the regulator as a friend as well. So don't look at us as someone who we have to be apprehensive or anything. We are also a friend to the industry. So that way you can look at us.
Absolutely.
No, I just want to sort of point out that I think many of the audience may not know this, but the Department of Payment and Settlement Systems in the RBI is somewhat different from the Department of Banking Supervision or Foreign Exchange Control, etc., in that dialogue is a requisite part of the entire process. And, we, and Dilip will vouch for this, we have sort of conversations with Mr. Vasudevan and his team, at least sort of on a twice a month frequency, if not more frequent. So, and the good news is that at a strategic level, I don't think there's any lack of alignment between what the payment vision system of the RBI is and what we want to do as an industry. So absolutely.
And to be fair to my fellow colleagues in fellow departments, etc., see, they have their own agenda, they have their own activities lined up. So I don't want to look at them. Of course, we are willing to collaborate and participate with the industry is what I wanted to say.
Oh, that's great experience, sir, even as association. So, sir, I will move to the next question. And I will first go to Dilip and then Ram and then come to you, sir. That we have, so Dilip, Ram, we have seen this announcement of PIDF, the whole development fund, quite an unprecedented move, quite a big sum, 250 crores, not easy. I mean, not a small number. I mean, it's also not going to be easy for them to do it, but it's a very interesting move. But on the other hand, we also saw that while this has been supported, the MDR regime which became a zero, the revenue was also taken away. In that context, do you think what has been taken away, what is coming, would that be sufficient? What are the implications? While there are a lot of innovation that is happening, do we have enough on the table for us to really continue to innovate, grow, and achieve our objectives? Like you said, 30%. So, over to you.
Obviously, the acceptance development fund is a great initiative, and RBI has made the contribution, as sir said, and the other ecosystem partners will also deploy money. But somehow I feel that it may not be the only way we can reach to, for example, if we need to get 5x, 10x growth in the acceptance ecosystem, because that's where the supply side has to be ubiquitous to migrate such a large population to digital payments. MDR, obviously, all of us believe that the reasonable MDR is required, is necessary, because it funds the acquiring system, which actually is responsible for deploying the terminals, deploying the QR codes, the service the merchants on an ongoing basis. So there is a kind of at a broad level, you require about 20 to 25 basis point cost on the acquiring side if they want to really do a reasonable job in growing the business or servicing the merchants or supplying the proper systems or having the best of the risk management, risk mitigation systems, follow all the KYC rules. The ADF can help. There is no doubt about that. ADF will help, but I don't think that would be the sufficient thing for us to grow the acceptance to 5x and 10x what we are looking at.
Yeah.
MDR, obviously, we have been trying to work with the to see if there is a review possible, because the ecosystem MDR is the only revenue, and various schemes which we have launched, like for example, we have launched a category in UPI such as P2PM, right, which is kind of a small merchant can actually onboard onto UPI payment system as a P2P, so there is no MDR already. It's a zero MDR category. And we have been actually trying. I don't think there is a but I believe that the government will reconsider the reasonable MDR to come back. That is very, very important.
The cost is about $500 million. It's about 3,000 crore.
Yeah. So approximately, $500 million to $1 billion is what the acquiring ecosystem requires to spend on an annual basis. To sustain the digital payment infrastructure which has been deployed throughout the country, including the manpower, including the servicing staff and the physical assets. So I just hope, we hope the future is bright.
Ram? You're on mute, Ram.
2 points to make. Firstly, I think the PIDF is an excellent move. 2016, I remember we discussed the ADF first with the RBI, and I think the guidelines for PIDF, if you just take a benchmark, right? Brazil, which is a comparable country to ours, has 65 odd million terminals. Why should we have only, like Mr. Vasudevan is mentioning, 5 million and 20 million? I mean, we should be 10x that number, right? And I can guarantee that both Dilip and I are going to be in the advisory council along with the RBI, and we want to be pretty aggressive in terms of the goals we set ourselves, right? Particularly in tier 3 to tier 6, in terms of using phone as a device, voice-based commerce for rural hinterland, etc., right? We should also reward innovation and risk-taking by the acquirers and help them subsidize their cost. And the second thing I would like to reflect on is, as Mr. Vasudevan said, this is a public good infrastructure. When you think about electricity, think about water, think about any of the public good, right? Somebody has got to pick up the tab for this, especially in a nascent country like ours, where the electronic and digital infrastructure railroad is still getting sort of laid. I think if there is a toll road being built, somebody's got to pay the toll, right? Especially as cybersecurity has to be there, connectivity has to be there and solved for. And I agree with Dilip that there's got to be some skin in the game, and I'm not commenting on what the degree of that economics should be, but saying there should be no economics for this is a very perverse sort of logic for why would anybody have skin in the game to put this up. So, I'm hopeful that with some dialogue, and this is one of those things where it's not a competitive thing, It's not Visa versus NPCI or anybody else. The industry is, I think, aligned in being sensible in asking for what the right outcomes are. And Dilip and I are absolutely joined at the hip in terms of saying we should do what is appropriate for the industry to grow as an ecosystem.
Yeah, absolutely. Vasudevan sir, would you like to talk anything further on ADF? I think it helps to some extent, but there are still gaps. I think we'll all figure it out. But anything on ADF you want to add?
No, I just want to say that yes, the concerns are genuine, but the ADF will actually bring down the cost of the infrastructure for the acquiring banks as also for the merchants. Let us see how things pan out. And the amount that is being put in is also substantial. We do hope that this will give the momentum for the acceptance infra to build up. And as we are talking about various other payment options being coming in and small value payments picking up, the volumes will also rise so much so that the margins can think down. So that is one thing. Of course, I can tell one thing that the industry seems to be aligned in alignment with this thought that there should not be zero MDR. I'm glad.
Yeah, but sir, zero begets zero, sir. That's there we are all aligned, but we agree that we need to be reasonable. We should not be overcharging. That we
industry
will
and
go to the government on that.
yeah, it's you all know Dilip has also said it better. So
Yeah.
let us hope and see how the future pans out.
So let me come to you on a different question, sir. We already have a sandbox where one cohort has already gone. We believe some more cohorts will come into play. Can we see the cohort being, let's say, opened a bit more, maybe multiple cohorts, even in, let's say, new innovative areas where it could be even crypto, for an example, it could be blockchain, it could be any of the new ideas which can happen, or similarly, sir, some new enablement beyond the sandbox. Like we've been talking about, there is a provision to allow NBFC to issue credit cards, but when it comes to non-bank backed NBFCs, that doesn't happen. So can we see more empowerment of fintech? The regulation is just coming in for PA. Going forward, as the, let's say, initial comfort is set between the regulators and a direct regulation, can we expect, like PPIs, they also to get direct BIN, let's say, membership for the acquiring BIN? Can we expect some of these as a journey? I mean, I'm not asking any commitments, or which I know it's not possible on session like it was. Is there a journey or a vision that we can see for a fintech perspective happening in that direction?
Yeah, actually, Naveen, you will also be glad that the role of fintechs in our digital payment space has been increasing and sufficient scope has been given them to participate, be it in a bank-led model or be it in a collaborative model with the banks and larger players. But if you see UPI, if you see Bharat Bill Pay, if you see the PPI business, everywhere non-bank players have had a significant role. And recently, we've also permitted interoperability of PPIs, wherein we have said that they can become associate or affiliate members or even direct members of the card networks. We do see some traction whereby some players have become members of these card networks as well. But the point remains that the future will have to see how they pan out, especially on the payment aggregator front. These are all new areas for them also to come in. They have not seen so much of regulation also happening. So we have to see. See, on the NBFCs being allowed to issue credit cards, you see that our instructions are actually permitting them to issue credit cards. We have two large NBFCs who are credit card issuers as well. The regulator will have to see value when the applications are received. Because let me tell you one thing, when we see the complaints being received by the banking ombudsman, etc., maximum complaints pertain to the credit card users. So we have to also see how we balance out the ability of these players to handle grievances, to take care of customer issues, etc. So we can be positive. Everything is there in place. So as the future pans out and as we get richer by experience, more and more players and entities will be definitely enabled. And if you see our draft framework for the new umbrella entity, we have mentioned about certain areas where the collaboration can come in. For example, it could be white labeling of costs, new payment initiatives. So we have plenty of scope for the fintechs to come, and we should be very happy because of the scope that is available. We have got plenty of investments coming in as well. If you see in India, digital adoption is the fintech adoption is the maximum in India vis-a-vis the globe. 87% is what the E&Y report says up to 2019. And maximum money has come into the payments and lending space in India. So they see value, we see value, and we can always do it a win-win activity going forward.
Sounds good. So coming to Dilip, do you think some of these areas that we are talking about, or as a card network, what more areas you would like to see on a sandbox or opening for fintech?
So NPCI has been working with many fintechs on the even on the card And you would see that we are in fact in the same
Yeah, we saw the
conference.
announcement.
Yeah, we are working with techs and banks to launch some of the commercial cards and some of the products. So obviously, I think the fintechs and banks collaboration is the only way to go, and we at NPC are strong believers in that, and it has to create a win-win model. I think it has to create a win-win model for both fintechs and banks, and then only the business can flourish and it can bring in the scale that is required. And I think looking at the success of UPI, the banks and fintechs have collaborated extremely well. The large banks embrace the model of collaborating back with the fintechs, and I think that has yielded results. What we are seeing in the market. So obviously, but as Mr. Vasudevan said, we have to be very very careful on the customer grievances and the customer experience, and I think there is a lot of work to be done. But obviously, you can't be perfect from day zero. It's a journey, and we'll have to reach there. If you start to reach to the perfect model before you put up the systems on the ground, you will never be able to launch, because by the time you're coming to the launch state, you have missed the bus. Something else would have come. So I fully take what Mr. Vasudevan said, and I think it's a and there is a lot of work to be done by the fintech ecosystem to give the confidence that customer is not left alone on the street when there is a grievance, when there is a dispute. So while the fintech community wants the participation back in the payment ecosystem, the way banks deal for the customer grievance or the customer complaints, the similar efforts has to be deployed by the fintechs to customers. I think if the customer is happy, as Mr. Vasudevan said, if the customer believes that this is the public good, I'm sure he will lap up the opportunity to use the digital payments.
So sorry to jump in, Dilip, here, and I just one thing from a fintech perspective and bank, non-bank, being both sides, having seen, I'll just say one thing, that we all, as an ecosystem, need to start putting standards and actually removing this word bank and non-bank. Because the reality is there are enough good non-banks who do it very well. There are enough banks who still have the same problem. So I think this bridge has to be on a standards and a certain benchmarks that whoever they are, they have to follow it. Those who follow get rewarded. Those who don't follow should be punished. That's the regime we are looking at. I'll actually ask Ram to jump in on the same thing, and then I will ask one more question, and then we have plenty of audience questions. So I'd like to jump into that.
Yeah. So just on this, I know Mr. Vasudevan, you want to interject. So just let me just finish my thought, and then I'll hand over to you. I'm a huge believer that, and I think Mr. Vasudevan, you called it out right in terms of the investment that is coming into sort of the whole fintech and payment space in the country is staggering. We should not have a situation where there is license capture or regulatory arbitrage between one entity and the other. Of course, everybody has to follow the same set of regulatory rules. But 2 points I want to make. One is acquiring, right? In terms of if you have a common escrow account and the settlement account, which is basically where the point of risk is, and that is held at a bank, right? But acquiring itself, the technology of acquiring can be done by fintechs, and I think we should open it up. There's no reason why only banks should do the acquiring business. In fact, on the PIDF, I think that's going to be one of our sort of big suggestions, because we have to incentivize more and more fintechs to sort of draw down on these funds and get into acquiring. So I'd leave that 1 point for consideration. And the other is, given the woefully low penetration of credit cards, and I know there are plenty of fintechs and startups right on this call who have sort of started out their credit card journey under the co-branding guidelines which the RBI has, working with a BIN sponsor of a bank. They'd love to have independent access to credit card itself. Of course, I buy the point around customer grievance. I buy the point around data security and cyber security. But I think we should absolutely, Naveen, to your point, remove this artificial divide between entity, because they're all regulated by the DPSS. And so long as that is the case, any regulated entity should be allowed to do absolutely.
So you want to add something?
No, I just wanted to add the point on regulatory sandbox that the initial cohort has been this, but there is nothing that would prevent more such experiments being undertaken. It all depends on the experience that we get based on the first cohort and the pilots that are undertaken. There are different approaches. We have the rolling application approach, or we have the specific window approach. So depending on what is coming up, we can always look at it. And if you see the vision document, we are technology neutral as well, be it blockchain or any other technology, we are comfortable. And even on the point where Mr. Ram is saying about the non-bank access to payment systems vis-a-vis the maybe through the bank, etc. If you see the vision document, again, we have mentioned that we are open to increasing non-bank access. So that could be a calibrated approach in discussion with the industry. Things can be taken forward. So there is nothing that like a closed chapter or anything. So we are all open.
So we've seen it opening. I think as the industry is growing, as we see you getting opened up more, we always want more. So it's an ongoing discussion, and we all have to do more for our country if we have to reach 30% digital. So one quick question to Dilip and Ram, and then I'm taking the audience question. So it's a rare to see. Well, it's actually not rare for me, but probably for larger audience, it's rare to see both of you together on a public platform talking. So how do you collaborate as a two competing but card networks, but still important entities? Uh, there are more card networks. I'm sure they also work with you. So do you want to talk about this collaborative or co-optive strategy? Ram, you want to go first?
Of course, and I'm happy to do that. I think the first point I'd make, and I think Mr. Vasudevan made this point, right? That in terms of nascency, digital payments, and Dilip made the point about personal consumption expenditure penetration, right? This is not a zero-sum game. So if I get $1 volume less, Dilip is not going to get $1 volume more, because the reality is that we are in such a underpenetrated segment. Together, we have an obligation to grow the market. I think the first obligation we have is in a sensible, thoughtful way, but we have to grow the market, right, for digital payments in the country, and that cannot happen without collaboration. Of course, there'll be areas where we compete, and we'll compete very hard, but I think the areas of collaboration are more than the areas of competition. Let me just give you 3 areas, right? Number one, in terms of risk management, and Dilip and I have already been talking about risk management as an area of fraud prevention, cyber security is absolutely an area where we are aligned. And I think the RBI has said that we actually have to have quarterly forums now, and there's actually going to be an RBI representative on those forums as well. I think that's welcome. Second, I think somebody, I can't remember who it was, but made the point about having an SRO and having self-regulation, right, for the industry. And we're already having some conversations around how we can do that across competing networks, right? And the third is in terms of sort of what we do in terms of areas like regulatory sandbox, a common tokenization standard for sort of the Internet of Things, right? Of having PIDF and what should be the objectives of this. So I see enormous scope for collaboration. For example, even on UPI, I see no reason why UPI should not have a tokenization standard that somebody like a Visa can provide. And that's absolutely non-competing sort of thing. And it's good for the industry if the security standards go up. So I'm very enthused
Sounds
that
good.
India is taking the lead in terms of, even while we have our distinctive customer segments and competitive standards, there's enough and more ground for mutual collaboration and industry growth.
Thank you. Dilip, very briefly, because I'm seeing the counter running, and then you also have a product launch coming.
Yeah. So competing becoming tough for us, especially when there's zero MDR. But we are still trying our best to give the giants like Visa, Mastercard sleepless nights. But we are trying our best. But collaboration, as Ram rightly said, I think we are collaborating a lot, and the Vichy from our side, and the Vipin from Visa side, and representative from Mastercard, we have been talking a lot on the risk management, fraud, cyber security, and I think this is a non-compete area, and we are very clear that we will have to collaborate if we want to keep the Indian ecosystem in banks, Indian fintechs protected. And I think networks will have to take a lead on that. So that is definitely an area which we are actively engaged and working on. And as Ram has rightly said, the other areas also we are in the exploratory stage. So that's what I think we keep talking to each other, and unlike industry things that we keep talking to each other, and similar to Mastercard, and we have interesting stories to share with each other.
Sounds good. So I'm getting quite a bit of warning from the session controller that we are running out of time. But just one quick announcement, and then I'll take one question from audience, and then probably we'll have to close the session. The announcement is that we are actually releasing a report on empowering payments for digital India. It's by PwC. That will be available in our resource center in the lobby areas of the conference for delegates. So please take advantage, go through it, and just take advantage of it. So actually there are 2 questions. Maybe one question Sir can answer, and the second question Ram and Dilip can answer. One is basically, all this looks good, all this digital payment, but what is the impact on financial inclusion with the digital payment? And the second question is, would blockchain genuinely want to impact? So that's a question probably Ram and Dilip can answer. So sir, first over to you, the question on real inclusion impact due to digital payments? Is there really that's happening?
See, actually, one of the main rails on which we are looking at the growth of digital payments is the involvement of everyone across all segments of the country. See, if you look at the recent announcement of RBI about one district in each state to be eligible for 100% digital payments, or even allowing the state level bankers committee where banks are there, the government is there, and other stakeholders collaborate to have digital payments, and us also to say that there should be a payment option to be available for every type of user, etc. We are inclusion. Whenever we are looking at new segments being added, whenever we are trying to bring in a new territory, it's for inclusion purposes. And we feel that while cash will have its benefits, there are significant benefits also available from digital payments, both to the ecosystem and to the users. So there's nothing like a divide between payment systems uptake and financial inclusion being ignored. Actually, it's a point of collaboration between the two. In fact, the entire purpose of digital payments is to facilitate inclusion. Without the security or the availability of infrastructure, if we can provide remote connectivity and a means for a user to make payments irrespective of where he is, nothing like that. The geotagging is one initiative that's also going to facilitate this. We are going to look at every pin code in the country. So I am seeing both as a collaborative effort, and each will have to live with the other. There is no such thought of each being away from the other. It's not.
Yeah, even the first cohort was that way.
Yeah.
So, Dilip, coming to you on blockchain uses in payment system, and then to Ram.
No, look, I'm just saying that, if Bezos can think about Blue Origin, and, if Musk can think about SpaceX, the least what we can do is, work on blockchain. So I'm very hopeful and bullish about the technology, but obviously the time will say.
Sounds good. Ram?
I'm super excited about blockchain, but one constraint and one opportunity. The constraint, of course, is the number of transactions processed per second, which blockchain inherently lends itself to higher ticket transactions and lower ticket. The second is Visa has just, in fact, announced a pilot program, and we're discussing with Mr. Vasudevan and his team for sort of what the regulator thinks, which is called B2B, which is a blockchain cross-border commercial payments use case. Super interesting, and I know, Dilip, you've just launched your commercial business as well today, so are going to launch. But I think we should sort of talk about how blockchain can help in this sort of area, because I think there are certain original repositories of truth which can be used particularly in the corporate use cases. So Mr. Vasudevan will speak to you offline on that.
So thank you all. I think this can go on for the whole day, and I know there are still a lot of questions. I'm sorry I couldn't take all of them, but I'm being continuously pushed to close the session in time since everything is digital and on clock. So sorry I'm like 3 minutes run away, but really thanks to all of you for making this panel a great discussion. Thank you very much.
Thank you very much.
Everyone, thanks. I agree. What a powerful fact session. Thanks, everyone. Thanks again.
All the best to the organizers for future sessions. Thank you.
Thank you so much, sir.
Thanks.